held bids. Now we've gone over the level 2, level 1, prints, big bids, and big offers. We're going to put it all together, besides the big bids and big offers. And we're going to start using level 1, level 2, and prints together to show you how to spot held bids. Let's get started. What are held bids and why are they important? Held bids are one of the most used and important indicators in tape reading. By spotting them, they'll provide you great trade opportunities where you're literally able to risk 1 cent sometimes. And it's very important because it'll provide you opportunities that don't show up on the chart. And again, it'll give you great entries with low risk. During the open, there isn't much of a chart, and you could use held bids to find great opportunities. Those, especially on the open, you won't be able to see on the chart because the chart hasn't developed yet since the stock just opened. When a stock does a lot of volume and a price, you want to keep track of that. Remember that. And trade around that price because it's a level. It's very important to keep that information, keep track of it intraday. Remember, all volume is relative, and has to be a lot of volume compared to what it's been trading at every price. So, what's a held bid? When there's a held bid, it means that at least 2 to 3 times more volume traded on the bid than it shows on a level 2, what the stock has been trading, or what you expected, and the bid actually holds. Remember that it's all relative. The more volume at a level, the more important it is. And it's great to use on the open when the stock is trending up because it's a high probability trade. And you should always consider them when spotted, whether you're long or short. So as a recap, a held bid is when there's at least 2 to 3 times more volume. I usually go by 5 to 6, but 2 to 3 is also acceptable. When there's 2 to 3, I do 5 to 6 times more volume on the bid. It holds, right? And it's more volume that you expected, that you saw on the level 2, what's been traded on every other price, and it actually holds a bid, does not go lower than that bid. If you're short already, you spot a held bid, it might be a decent reason to cover some or to add if it drops. You just need more than that indicator in your favor for a trade. But when there's at least 2 or 3 times more volume trade on the bid than it shows on level 2 and you expected, it actually holds a bid. Alright? Remember, it's all relative, and the more volume traded at that level and holding, then the more important it is. Supply-demand dynamics of a held bid. Always keep in mind the supply and demand dynamics of a held bid. When the held bid drops, that means sellers are in control. There's more supply than demand, and the stock should see lower prices. When the bids are holding, it means the buyers are getting more aggressive, and there's more demand at that price, and should see higher prices. Very simple. So what do you do when a held bid holds? Bid holds, or when it drops. When a bid is holding, you should get long. Higher probability again if other indicators are in your favor. When it drops, you should not be long, possibly short if the other indicators are in your favor. And you just repeat this over and over again and make it an instinct for when you trade. When there's a held bid, you should be long. When there's a bid that drops, you should not be long, possibly even short. So, reason behind getting a held bid, it means someone's buying at that level. It means someone's supporting the level at that price. And if the bid drops, you should no longer have a reason to be in the stock. So if you're long, you should just get out of it. If it's part of your plan, and you should always gather information. I remember how we were talking how your orders are taken. You should always gather information from all that. And every trade you make gives you information about a stock, and you just use it to your advantage. How quickly were your orders taken, or did it take a while? When a bid drops, it doesn't mean you should be short. It does mean there's more supply at that level, but remember, you gotta have all the other indicators in your favor. And if a stock looks like it's gonna go lower, then a good position. If a stock looks like it's gonna go lower, then a good position would be to add to a short if you're not, if you're already short, or enter short when a bid drops, a held bid to be exact. And again, all the indicators should be in your favor. And buying on the bid, that's being held is a good technique for uptrending stocks. It shows great risk-reward opportunities. And the same thing goes for entering shorts when the held bid drops on a downtrending stock. Remember, the trend is your friend. So if your stock's uptrending, the bids are holding, you want to be long. If the stock's downtrending, the bids, they hold but then they drop, then there's more supply at that level. supply-demand dynamics of bid holding and dropping. If the bid drops, then there's more supply. If the bid holds, then there's more demand for stock at that level. Very simple, but you should always keep in mind of that so you get a general idea what's going on in the market. Let's use this for example. So we see here is a tick chart, DRI, and we spot a little held bid here, right? These are through prints, but you see the bid holds there, red print on the bid, and it doesn't go lower, okay? And from that point, it trades higher. Okay, so this is what a held bid would look like on a tick chart. Again, here's a held bid when it drops. It dropped and it traded lower. But then finally it actually held the bid and traded higher. Very simple. Same exact chart. And I show you this chart because you don't see it on the 1 minute. It's better to see it on the tick chart. But for example, rarely do any platforms provide tick chart information. So this is a good idea so you can understand why it's very important to read the tape, because the charts don't show these things. And what does the held bid look like on the level 2 imprints? Alright, it's very easy to spot when you're focused. Remember, the held bid means there's 2 to 3 more times volume being done at the bid and it holds than you expected, you know, that from the average of all the other stocks. On level 2, remember, all the volume is relative, so the more volume being done at that bid and holding, the more important it is. Let's use an example. Alright, say Apple went up from $400 to $425. The bid drops to 417, and at that price there's an NYSE bid for 300 shares on level 2. And you know, Apple's been trading about 600 shares per penny. But then you see a bunch of prints for about 1,900 shares total at that 17-cent area on the bid, and the bid never drops below that. Okay? That means the bid held. Traded a bunch more volume than you expected, and what has been doing so, and it actually held. Right? So a decent opportunity is to get long in front of that and get out if the bid holds. Bid drops. Bid holds, you want to be long. Bid drops, you want to get out. You know, it means that there's a buyer there buying a lot of stock and they're not showing. And you'll notice there's an underlying bid at 16 cents, and the play would be to get long at the 17 on a different ECN. I would step in front of it by a penny and get long at 18 and get out if that bid drops. So you know, your risk right there is a penny or two. And you know, a stock shows a certain amount of stock on level 2 at a certain price. Remember, it prints 2 to 3 times at that volume, and more volume that you expect, and actually holds that price on the bid. So, let's use an example. Before, you know, you see that 30 has about 1,500 shares on the bid, right? And the stock has been, you know, just trading a couple hundred shares per price level. And you notice that it printed about 5,000 shares at the 30 mark. Okay? So you got to keep an eye on the prints. Remember, the red prints are on the bid, green prints offer. And you see, you know, about 1,500 shares on this 30 bid. But so far, it's printed about 5,000. After you see that 30 has about 200 shares, now it decremented a little bit on the bid, right? So you only see 200 shares. And again, it's only been trading a couple hundred shares per price. But you notice now it's printed about 7,100 shares at 30 cents, and it's holding. It's not going lower. Right? You see all these prints here? Way more than the 1,500 that I was showing, just by that print alone. And it's actually holding the bid. It's not going lower. That is what a held bid is. You can see it by, you know, the chart, the stick chart. And it's not a, you know, exact reason to get long. The stock was down 8.5% that day. But this is what I'm showing you what a held bid is, right? Trades here, 30. It showed a couple hundred shares, 1,000 shares, and it went to that 30-cent area on the bid, did a bunch of volume, bounced, went back and held and held and held and held and held and held, right? So usually you want to be long this and get out if it drops below, right? It means someone is supporting that level. Let's go on to the next chart. Stock was weak. This is why I say you have to have other indicators in your favor. Because it down, you know, it gapped down, it was weak, and it was downtrending for most of the day. It was holding a lower high here. And there's a held bid there at 30, right? But like I continue to say, you always got to have other indicators in your favor, right? So that 30-cent mark, say you're short previously, if you're short in these bounces, then right when this buyer dropped, you could have added to the short. Because right when that bid dropped, quickly traded lower, right? So let's recap. The stock was downtrending, very weak on the day, down almost 10%. A buyer showed up, could be someone covering their position from higher, whatever the case is. And just because the held bid does not mean you want to be long. Remember, you got to have the other indicators in your favor. But let's say you're short, or you wanted to get short this at one point, then you would have to wait till the 30-cent, the 30 buyer dropped, and you got short. And this is also important because this is where overlapping comes in handy, because there's a huge buyer there for most, almost 2 hours, hour and a half. So the more volume's being done, the more more of a move you could expect when that buyer drops. And this is a type of move where you would overlap to about 85 or 84 cents. So when it does drop, you got to be very quick. You hit that enter button, and if you get filled, you get filled. If not, you missed out on the trade. So let's look at CRK. 19 shows about 2,400 shares on the bid, but the print's showing a lot more than that, right? Those bids just stuck there. And remember, it's up about 12% on the day, but you notice this because it's only showing 2,400 shares on the bid, but it's printing way more on these red prints, and it's holding the bid. It's not going below that. And as you see here, 19 is that it was bull flagging, these held bids held, hold higher, and then right here bids started holding. So a little decent opportunity was to get long there at that 19 or 1901 with that held bid and get out if it drops. Here's another example of how and what held bids look like on the chart. Pre-market, Teva 52 had a buyer and held the bid there, right? Traded open, the open came along. Remember, you got to keep note of where volume has been traded, how much volume. Went back to that 52, held bid, went up 40 cents, went back, tested again, did more volume there, held, and continued to trade higher for about 60 cents. Then went back down, didn't even make it to that level because more demand at that price, this little area zone, and again bounced. So that's what a held bid looks like on the chart. Again, DANG, as the example we used before, 30, held bid, just doesn't go below that price. You see it on this tick chart because it just holds there. Doesn't trade below. And the bid sticks here. You don't see it 1 penny below that $30 mark. CRK. Right here at 1850, you see red prints held, red prints held, red prints held, red prints held, meaning the bid traded there at 1850 and didn't trade below that and held. And from that point, 1850 didn't trade below that and went up 50 cents. And you always got to keep track of what the buyer's doing, and you always got to keep track of the held bids. So what you do is you follow that order that was there at 1850. Again, they stepped up again, and they stepped up to 19. So if or when the buyer and that held bid eventually drop, that's your exit, while you're keeping your risk very, very low while keeping a high probability trade. Okay? Again, this is what it looks like on the 1 minute chart. You don't see it as clearly. You see like a support level, but you don't necessarily see what's going on. You aren't able to follow the actual buyer, right? That's why tape reading is so important, because you're able to see it on the tape where they're buying, what price and how much volume, and see if they step up. And they did continue to step up, but you're not able to see that on 1 minute charts, right? You're just able to see, oh, okay, went above this level, but you don't see that buyers continue to step up and stepped up there at 19. POT, same thing. Held bid here, went back, retraced, held bid there, quickly bounced. And there's a held bid right here too. Again, this is a support level. On the 1 minute chart, you'll probably be like, okay, I saw that, I'll put my risk there. But no, there's a held bid right there. Could have gone out below. You could have made a decent trade there. 1 minute chart just looks sloppy, right? Let's just look at a support level, but you don't actually see the actual buyer on the tape. rig, same thing. Held bid here, bounce, held bid higher after quickly down traded. You know, say you want to get long here for the bounce, stop below there, your risk was very minimal. You could have made a quick 80 cents or 60 cents there. Okay? And for example, you don't really see it on the 1 minute chart. You might see this little resistance level, and yeah, a little wick here. Oh, it's probably resistance. I'm going to short it with a stop there. No. You see a bull flag here. You see a buyer supporting that. Again, multiple indicators in your favor. And then it broke out above that and continued to trade higher. TXN, another example of what it looks like on the chart. Traded down here, held the bid there at 50 cents. Traded higher. The bid, you know, the pattern was where it continued to step up, wouldn't have a hard downfall. Again, bid stepped up to this area, held, and traded higher. Stock was strong, and the bids continued to hold. Again, on this 3 minute chart, you can't really tell. It's like, oh, it broke down here, maybe there's a little support level, it's a little pattern. No, you can't tell. You got to read the tape to identify these buyers and these held bids. Here's another example. On the tick chart, see the held bid there, 74, steps up to 74.50. It continues, they step up and they continue to hold the bid higher while completely uptrends. And this alone, you could have yielded, spotted this little bid here, these here, these here, these here. You could have made a great risk reward trade of points. You could have made points on this while keeping your risk very, very low. And you could have followed the buyers that were buying on the bid and exit when they dropped. Again, 1 minute chart, you cannot see it clearly. It just looks a bunch of candlesticks. It's not as defined as if you're reading the tape. Okay, now we're going to watch for held bids in the stock CRK. So remember to keep an eye on the level 2 bids and the prints to spot a held bid. Alright, so far we see 1901, print a bunch of 1901, and now we only see 100 shares. Let's keep an eye on the prints and see how much it prints. $19.01 dropped, so let's keep an eye on this 19. So right there, we're going to keep an eye on the bids, okay? And right here, it just dropped to 19. We're going to keep an eye on how many shares are on 19. We'd see there's about a couple thousand, 1,000, 2,000 shares on the bid here, and we're going to keep an eye on how many it prints. So far, it printed 24, more than that. Alright, so far on 19 it's still holding. The bid has not dropped below 19. The bid, it shows a bunch of prints through 19. It held. The bid did not go below 19. You see more prints on 19. You're going to continue to see the bid hold at that 19 level and not go below that. You're going to see that it continues to do volume at 19 and that the bid does not drop below that price. So again, we see this here. Keep an eye on this 19, 19, 19, 19, 19, 19, 19, 19, and does not go below. And you're seeing that a lot more volume has been traded there than at other prices. Okay, and you see that 19 only has a couple hundred shares now on the bid, yet the bid never dropped below 19. We saw a bunch of volume go through. So let's continue to keep an eye on that. And now we see that it's trading higher from that 19 level. So what you would do on held bid is get long at or in front of that 19 and get out below. So remember what we saw. We saw 19 held the bid by the bid holding there at 19 and not going below that 19 level, putting a bunch of volume at 19 and then trading higher. So let's continue to watch this. See the bid still above 19, 1901. $19.06, $19.08. Still printing very, very slowly. So like I said before, 19 held the bid. The bid's going to continue to step up. Now it's at 1905 by 1908. And so far it gave you an opportunity to get long at 19 or 1901. And it's continuing to trade higher. Pause this really quick. Let's pull up a chart. So we're seeing right here 1901, 19, and previously consolidated, had some buyers, and then once it's 19 held the bid and trade higher from there. So that's exactly where we are at now. 207, 908, and you continue to see the bid continue to step higher. Now it's near the high of the day of 1911. $19.05. Alright, so keep it on this $19.05. About 500 shares on the bid. I'm going to keep an eye on the prints. Okay, so you see that? You see how it's only showing about 300 shares right now, and it printed a bunch of shares and it's continuing holding. The bid does not go below that level. That is another held bid. That means a buyer just stepped above from 19 to 1905. So if you got long at 19, the buyer stepped up to 1905, meaning you want to get out that 1905 drops. Okay? $19.06 by $19.07. High of the day is 1911, as we can see from the level 1 box. Finally, the buyer dropped from 05, and you see that right when the buyer dropped that 05 on that held bid, it quickly went through 04s, 03s, 01s, so still giving an opportunity to get out, and eventually below 19. So this, gave you an opportunity if you wanted to get long. You could have gone long at 19, 1901 for another leg higher, even though it was up 12%. The buyer did step up to 05, meaning you would move your stop if the 05 buyer dropped. Eventually did still give you an opportunity here to break even on the trade, and then eventually trade lower. So when you see that, it means the buyer is gone now, and it could have been a decent short opportunity. Okay, in this video we're going to watch CHK, and we're going to watch how the bid holds at 85 but eventually drops. So let's keep an eye on the bid section. Remember, it's on the left side, and the prints. So right off the bat, saw some volume come through, And we only have about 1700 shares on the bid. So let's keep an eye on that, and let's key out how many, how much size has gone through the 85. And we just saw right there, let's rewind again, saw a bunch of prints at 85, saw a bunch of size go through. It's only showing 100 and refreshing, 600 and quickly refreshed, and the bid held there at 85 and traded higher. Okay, let's do that one more time. Excuse me. So we see 85 right there on the bid. Doesn't trade below that by even a penny. 85 holding. Bunch of size come through, way more than we expected, 3 to 4 times more than we expected. They refresh, meaning show more size, and it holds and trades higher. Okay, so that's a held bid. And eventually we're going to see it trade lower, and eventually the held bid is going to drop. 5 and 2. Remember, 85 was where the buy was. So, if all your other indicators show you that's a decent spot to get long, you could have gone long at 85, 86, and say you sell here if you had a reason to sell here. Per technicals, if it was a level, then you could have made a quick 25 cents on very minimal risk. Alright, 15 cents, 20 cents. So let's continue to watch this. We saw it pop up. Now let's go back to the 85, 87, 88, 85. It's holding so far. 85 bid, seeing a bunch of volume go through. It's continue to hold and eventually dropped right there. Let's rewind that. 85 holds, drops, and right there. Now it should trade lower. The held bid dropped. This video watching DRI. Again, we're going to watch for held bids, so keep an eye on the bids and the level 2. And the prints, excuse me. $25. $30. Looks like there's a little hidden buy there on 30. So you see how 30's on the bid, 29. There's a penny spread. 29's on the bid, 30's on the offer. And you just see a bunch of 30 prints. That right now is showing a hidden buyer. Finally dropped. Offers at 29 now. Let's continue to watch. Okay, so far we saw that the 30 and 29 cent bids dropped, and now we're at the 25 cent bid. So we'd like to see him do more volume to actually hold before we call this a held bid. So far is around 2,000, a little more than 2,000 shares at 25. It dropped to that price. The bid couldn't drop below that 25 level, so we're still watching. Okay, here we go. So we see how 25 decremented. Now it's only showing about 1,000 shares. Before showing about 2,000. Look at all these prints here at 25. Remember, red prints means been traded on the bid. See how it hasn't dropped so far? 25 cents. It continues to do a bunch of volume on the bid at 25. So right there was a held bid. See how it's trading higher now? 30, 29. The bid stepped up above 30. The bid needs to get above 31 before it can actually continue going. And it did. So let's go back to the other part. So we see all this volume here go through at 25 cents on the bid. See all these red prints. We see how there's about 2,000 shares currently at the 25-cent bid. And what we see on the prints, see a bunch of prints come through at 25 cents, red, meaning they're on the bid. The bid not drop below 25 cents, actually hold and then trade higher. And we're back at 25 on the bid. Keep an eye, see all this volume happening here? All this volume, 25, 25. You see how it's still continuing to hold? Even though it's only a couple hundred shares now, on the bid, continue to hold it, a bunch of volume at 25. The bid never went below the 25-cent mark. So that was a held bid. Okay, so we're going to watch Groupon for a held bid. This is the day of the IPO, so it's going to be a lot quicker than usually other stocks that are in play because it's the day actually IPO'd. So right there we just see 29.20. Let's keep it on 29.20, and you can see how the bid holds there. Bid should not drop below. It's a held bid. You can see a bunch of volume here. So let's see if it retests the level, confirm that there's a held bid there. Yeah, so you see how 20 held there, 20 cents. Doesn't trade below. Continues to hold. You start seeing a bunch of prints come through, and it quickly trades higher. So say you'll be able to spot that. Let's just do a quick run through. This is before. So drop 29, test, holds 29. Trades higher. Now you see the bid step in there. You can see a bunch of volume come through at 20, and the bid continue to hold at that level. 20, see all this volume, you see 20 just never drops the bid. So there's a buyer there. Again, shows it, and it quickly sprayed for about 80 cents. Okay, so that right there presented an opportunity where you could have gone long, and 20 is still there buying on the bid, doesn't drop. You see all this volume come through, and if you're quick enough, which you should be, you'll be able to get in front of that 20 buyer, and build a position where you can take some scalps and trade around that level. And see right there, again, the buyer stepped back to 20, held there, all that volume, and eventually dropped. So in an instance like that, what you would do is, say you see a buyer and you like the overall setup technically, so say you do get long from that 20, you usually want to cover some risk very quickly, especially if it went up 80 cents off that level. You're risking, with slippage, about 5 cents if you're quick, and 80 cents risking 5 is a pretty good risk reward scenario. So you always want to cut some off, especially off a trade like that, and always follow your plan. Also, that bid drop eventually, meaning there's more supply in the market, but there wasn't that much slippage. Okay, so remember, held bid is at 29, and a held bid is when the bid usually, sometimes usually shows just like 100 shares, trades a bunch of volume, the bid never drops below. Okay, so in this video we're going to watch in KR, we're going to watch for a held bid at 24. So let's keep it on the bid section and on the prints right here. Okay, so right there, saw the bid drop to 24, right? About 700 shares, yet we see all the size coming through and actually holding there at 24. Alright, so that right there is a held bid. Let's rewind, see the bids at 24. See a bunch of size coming through over 3 to 4 times that. Continue to hold. The bid does not drop even by a penny at 24 and trades higher. Okay, in this video we're going to watch for a held bid on TXN. Now keep an eye on the bids and the prints for the held bid. So it's keeping on 10 cents, 29.10. Keeping on the red print. So we're going to see that there's only a couple thousand shares at 10 cents on the bid. Yeah, you're going to print a bunch more, at least 3 to 4 times that on the bid via the red prints. Hold, the bid's not going to go below 10 cents, and then trade higher. So see, 2,100 shares on the bid or so. See how it's bid. See how the bid held and did not go below that. Just rewind that. So we see how 10 cents it stopped there, and the bid did not go below the 10 cents. So that right there was a held bid, and now it should trade higher. And with the held bids, we know that it's a held bid because the bid does not drop below that certain price, and it does about 3 to 4 times more volume than you expected to do at that price.